Hello, my name is Tomy Shaw, and on this video, I just want to make a video on why I decided to put money into Bitcoin, about 1% of my total net worth, of my total assets into Bitcoin. And the reason I started to really consider Bitcoin as an asset is because what I did is I broke down everything in the world, the total world debt, total world assets, total world GDP, total world real estate, total world equities, Bitcoin, gold, total world fiat, world art, world inflation, and total tax revenues. Okay. And the reason why I started to essentially consider Bitcoin is because I'm a real estate investor. And recently, inflation went a lot higher. The cost of hiring somebody was costing a lot more. So essentially, it was creating problems that I had to find solutions to solve the problem of rising prices and stuff like that. And I started to think about one question that I ask myself all the time is would I hold the asset for the rest of my life? Like real estate, I would own it for the rest of my life. The S&P 500, I would own it for the rest of my life. So for me, if you ask a question, would I hold it for the rest of my life? It becomes an investment. Like say you buy an individual stock and you ask a question, would you hold it for the rest of your life? And you say no. For me, you're essentially speculating, okay? So what I did was that I took the total world debts, total world assets, and I started to see that there was a pattern of like the perfect portfolio because if you look at it, the total world debts are $315 trillion. Okay, maybe these numbers are a little bit off or whatever, but the numbers that I could find was about $315 trillion worth of debt. There's about total world assets, it's about $777 trillion. And if you look at the total world GDP, it's about $109 trillion. Okay, so if you divide total GDP by total assets, it gives you a return about 14.1%. So it really makes you think because who's getting most of that return? So that's the questions I started to ask. And if I just continue a little bit here, total world real estate is $634 trillion. Total world equity is $115 trillion. When I'm looking on this side, it's because I'm looking at my other screen, okay? And Bitcoin is about $2 trillion. Gold is about $18 trillion. Total world fiat was 8 trillion, but I think there's a little bit of mistakes in these numbers because they seem really low. And when you look at the total tax revenues, it's about $25 trillion. And the information I found about the total world inflation is 5.69%. So whatever you're living in, if you're living in Canada or the US, your total world inflation in those countries is about 2%, but the total world inflation is about 5.69%. So it's even worse than a lot of people seem to think about. And when you look at the world net worth, it's about $462 trillion. And if you look at it, if inflation is 5.69%, that means $26 trillion has been stolen from the total population, and nobody voted for this. Okay, so this is where inflation seems to be. It's something it's there, and you're just accustomed to it, and nobody's asking questions about inflation. Like what is it doing? Essentially, it's eroding the value of currency or debasing the currency. So essentially, it's favoring people that have assets and it's robbing from everybody that's saving or has good value. If you saved money and you don't have any debts, it's essentially hurting the person that is taking the right actions. If you have $1 million in your bank account, you don't have any debts, and you're making $60,000 a year and you get a 6% inflation, essentially all the money that you earned that year has been taken without your permission. Okay, So this is where it starts to get a little bit tricky. And when you start to think about inflation, it brings a morality question in a sense. Is it okay to start taking advantage of the system? Because if you know inflation is eroding the value of the money, well, essentially, you're gonna borrow, you're gonna malinvest. Some people are gonna buy a couple of houses because they want to protect from inflation. They want to borrow money to put it into an asset that the debt will be eroded by inflation. The value of the property is going to increase because of inflation. So if you think about it, all these decisions are based around trying to protect yourself from inflation and not really thinking about how you can increase your productivity. And productivity, when you increase it, a lot of people don't notice, but is that when you increase productivity, it decreases the prices. And a lot of the measures that are taken by the governments, a lot of people say it's going to create inflation. But if you're increasing productivity and you're not creating new money, it's essentially going to decrease the prices, which will be a lot better for everybody. And if you increase productivity, you also increase the people that are working, essentially the consumers, and the taxes being collected to the governments will also increase. But if the government does not overspend or underspend whatever it earns, it creates an equilibrium in prices. Where it becomes a problem is that when they create money, where they spend money that they don't have, they're increasing the money supply. And this is where if you increase the consumption, artificial consumption, and it's not real consumption, the government will have to sustain that in the future because it's consumption that's being consumed right now and it will not have an effect for the long term. So essentially, what it's doing, it's um, it's increasing prices where it's increasing the inflation, and a lot of people don't want to say that the government is creating this inflation, but in reality, it is creating because it's increasing the money supply. So what I've started to also notice is that 40% of the total world assets are financed. So 777 trillion, 350 trillion of debt, that's 40%. So for me, when I started to deconstruct this world phenomenon, what I started to notice it was that this was almost like the perfect portfolio. If you look at it, there's like 40% of total wealth. So essentially, if you have a portfolio of $1 million, well, you can have like $400,000 of finance to increase your productivity, like finance to invest, essentially, not to spend, but to invest. And the way that the total world equity or assets are confirmed, 81% of the total world assets are into real estate. 81%, think about it. That means 81% of the wealth that was created in the world was created through real estate. It's about 14.75% for the total world equities. So it's kind of counterintuitive, but when you think about it, more wealth was created through real estate than that was created through equities. And this is about 15%. So if you look at it, if a person has $1 million, essentially he should have about 81% of his total wealth into real estate, 15% into equities. And if you look at the total world gold, we're talking about 2.31%. So for me, the perfect allocation would be 2.31% of your total net worth. So it'd be like $23,000 into gold. And then when you look at Bitcoin, it is about 0.3% of the total world assets. So for me, I felt it was a little bit low. So I put it at 1%, 1%, because I really feel that this domain has a lot of utility, especially I think why Bitcoin is so hard for Canadians and Americans to understand It's because we have a stable currency, whereas everybody else in the world have these currencies that are falling. So imagine if you have a stable, anything that's stable in a currency that's falling, it's going to be a lot better than whatever you have in that currency because you're just getting devaluated. So essentially, this is why I decided to put 1% of my total net worth into, not net worth, but my total assets into Bitcoin. And ever since I did that, it already went up to 1.4%. And my goal is to keep this into my assets for the rest of my life. So essentially, this makes a lot. Essentially, I hope this makes sense for you guys because when I started to break down the total world assets, that's where I started to notice that the perfect portfolio essentially was already created, and all we have to do is replicate that that portfolio. Okay, do I have any concerns about Bitcoin? Honestly, I have a lot of concerns about Bitcoin. Maybe I'm too naive, maybe I'm not good enough yet, but it really feels like sometimes it's like a Ponzi scheme. Sometimes it feels like that. It's because it always needs somebody else to buy it higher. I know there's a lot of savings that's being done throughout, essentially like transactions across the world. If you want to send money to the U.S., to the anywhere, any parts of the world, I know there's a lot of savings. Um, when we look at essentially buying it from iBid, you're not really holding the assets, so the real reason you want to protect yourself, you're not essentially getting it from that aspect, but at the same time, it's a $2 trillion asset. It'd be really hard for me to really see that uh, it would be something negative, okay? Because for me, the world has voted a $2 trillion world asset. But now, okay, essentially, this is the negative part where maybe I need a little bit more education to see a little bit clearer on this side. But I just want to be honest with you guys. I do have concerns. But on the other side, I did net flows. I did some projections of net flows that could be injected into Bitcoin from here to 2030. And what I see is that it could be worth 286 trillion dollars, which would be almost, say I do 286 on two 143 times more than it is right now. So essentially, it would bring it up to uh 1.4 million, I think. Say I just multiply this. It'd be $14 million per Bitcoin by 2030. Okay, are these correct? What I did is I took the net inflows from 2021, 2022, 2023, 2024, and I just did a uh, exponential curve where by 2030 the net flows into Bitcoin would be 1.4 trillion dollars. The multiple effect is $200 per $1 invested into Bitcoin, and it brings it up to $286 trillion world asset. Okay, do I believe it's gonna do this? Honestly, um, I love exponential charts because there's stuff that are really hard to for the mind to comprehend. So every time there's an exponential function or a power law or whatever, the mind always has a hard time to. So this is essentially why I decided to put 1% of my total wealth. 1%, if it goes to zero, it doesn't affect me. I don't want to go higher than 1% because I feel it's more important for me to have something that I can hold, and I know that I would not change my mind, or I know I would not become emotionally attached to the position, to whatever happens to that position. So for me, that's more important. And at the same time, the other way around, if this goes up to 143 times, I would have about, it would become mostly my portfolio. At a certain point, I will have to rebalance that portfolio. So I just have to think about at what point I'm going to start rebalancing that portfolio, because we have to remember that at the base of it all, I am a real estate investor, which started to include Bitcoin into my asset allocation. And I really feel like this could be a winning strategy, because I asked the question, would I hold Bitcoin for the rest of my life? And the answer was yes, because it's like a new category of assets. The same thing with the S&P 500 or real estate or gold. Would I hold all those categories of assets for the rest of my life? And the answer was yes. So every time I get to an answer that is yes, I'm going to put it into my allocation, asset allocation. And this is how I got to the conclusion that Bitcoin had a lot of upside. And for me, seeing an asset grow by this much just brings me to the conclusion that a lot of people know a lot of things that I don't know. So essentially, if the smart money is pushing this asset to a $2 trillion asset, people must know something that I don't know, especially lately with the government, with Donald Trump wanting to put it on the Federal Reserve, buying a million, having a strategic Bitcoin reserve, buying almost $1 million worth of Bitcoin uh, could create a lot of value for this space. I'm just trying to get my head around, okay, if the asset is growing up, it feels almost like deflation is the same thing as inflation. They call it a deflationary asset, but if you're just pushing the asset higher and higher and higher, it almost feels like it's the same thing as inflation. Instead of devaluing the money, you're inflating a currency or an asset, and then you're giving access to that money, which in a sense feels like it's going to create inflation. So it's really hard because it depends how you're looking at it, and either way, when you're looking at it one way or the other way, for me it gets the same conclusion. But essentially there's a lot of questioning, and it took me a really long time to be pro Bitcoin, almost more than 10 years. I heard about Bitcoin in 2014. I thought it was a scam. It was about $100, $140 a Bitcoin, and I was telling to everybody that I know not to buy it. And today I really feel like skepticism can be very, very detrimental to a portfolio. And today when I hear something, when I hear a narrative, I don't want to I don't want to be just trying to stop myself. So essentially, I'm gonna leave you guys with this. Hopefully, it makes sense. If you got any comments or clarification or videos that you think that can clarify the information that I was talking about, just put it in the comments, and I'll be happy to watch them. All right, have a good day.